how you take your trade. So the topic for today is huh? Mm, top down analysis. Analysis. So top down analysis. I know that most of you will have heard about or yeah about how will I say about top down analysis. Top down analysis is basically analyzing from the higher time frame, then going to the lower time frame. Because higher time frame setup play out more and better than compared to the lower time frame. That's why it's better to mark your zone on the higher time frame before going to the lower time frame for more confirmation than any other thing. So for the way I trade, the way I take my trade, I go from if if I want to do swing trading, because if I want to do swing trading, I check the weekly time frame. If I want to do weekly swing trading, because most people do swing trading, but me, I don't do swing trading. I do day day trading unless I see that okay, this the setup I saw is going to maybe it's moving to one direction for long, and maybe my TP is very far, and I know that the trade will get to that place. That's when I swing. But if I know that okay, this pair is not going for long, then I won't swing. Understand? Sometimes when I swing, it maybe is my day trading. Maybe it didn't get to the TP I want, and I still see more potential in it that it will get to that TP. That's when I can hold trade overnight. But if I see that this pair I'm analyzing will give me maybe move for like 3 to 4 days or 5 days before it get to the TP I set, depending on how the setup is, and that's when I will use weekly to check the direction. So for you to know the direction of the market, you need to check your if you are the type that do swing trading, you need to check your weekly. Then from weekly, you drop down to 4 hours. Then from 4 hours, you drop down to 15 minutes. This weekly is just for you to know the direction. Um, let me go back to it. Weekly for direction, 4 hours. 4 hours is for marking your structure and POI. You cannot mark your structure on 4 hours time frame and say you are going to 1 hour time frame to mark your POI. I see a lot of people do that mistake, and me too. I've done that mistake before when I started trading. Understand? I've done that mistake before. So if you see your structure on 15-minute time frame, your POI should be on 15-minute time frame. If you are not seeing any POI, that means that structure is not good. You will leave it. You will not force to see POI. If there's no POI, there is no there. So you will not force yourself to see a POI. Understand? So if you see a structure on 4 hours time frame, your POI must also be on that 4 hours time frame. So also now for 15-minute time frame, 15-minute time frame now, after you have seen your structure and your POI 4 hour time frame, when price gets to your zone, you use 15-minute time frame for confirmation. Is this for confirmation? That's what I use for confirmation. The only time I use 5-minute time frame is alongside this one is when price gives me confirmation and price is coming back again to maybe after it's giving me confirmation and I still want to use candlestick confirmation with it along to get a sniper entry. Like the trade I took today on GPUSD, my setup was on what was it called on 30-minute time frame. Was it 30-minute time frame or it was on 30-minute time frame? Then I dropped down to 5-minute time frame for my the confirmation. Then I use 5 minute time frame to take the sniper entry. So this is it. I use 5 minutes, but most of the time I don't use 5 minutes when I don't do swing trading. But this is what you need if you are a swing trader. This is what you need if you are a swing trader. If you are the type that swing. So if you are the type that do day trading, when it comes to your chart, you need um D1. You can use 4 hours, but if you are doing the trading, you can just drop down to 1 hour. Then you can drop down to 5 minutes when price gets to your zone. So the daily now is for direction to know where the market is going for that day. The what's it called? The 1 hour is for your POI and structure and POI. Then the 5 minutes is for confirmation. 5 minutes for confirmation. So that's it. Um, using all this. Sometimes I used to include 4 hours here. If I go to daily time frame, sometimes I use 4 hours here. Let me just add 4 hours. That's if I didn't get what's it called? If I didn't see a structure on 1 hour, I do use 4 hours sometime to also look for structure after I check my daily time frame, structure and POI also. But when you have 4 hours time frame, your 4 hours must surely go with 15 minutes confirmation. This is how it works. These 4 hours and 15 minutes, they work together. They work together. So that's one thing you should know. They work together. You should know this. Then 1 hour and 5 minutes, they work together. So if you see your structure, let me say, if you see your structure on time frame like 1 hour, 30 minutes, 1 hour, 45 minutes. I don't use 45 minutes most of the time, 30 minutes. Your confirmation should be what's it called? You should use this, you should use 5 minutes for confirmation. Use 5 minutes for confirmation. That's what you need. You need 5 minutes as confirmation. You don't need to be waiting for 15 minutes to use for confirmation. You need 5 minutes. But if your entry or your structure is on 4 hours, you must surely go with 15 minutes. If you have 4 hours entry, 4 hours structure or POI, anyone, and you mark your POI on 4 hours, your confirmation should be on what's it called? Your confirmation should be on the what's it called? 15 minutes. Should be on 15 minutes. Okay, let me just do this. Let me do this. Let me remove this. If you are doing what's it called? If you are to take trade, if you are swing trader, let me write this here. If you are a swing trader, if you are a swing trader, this is how I should be. Sorry, I made a mistake. I think if you are a swing trader, if you are a swing trader, this is what you should do. The weekly time frame, then the daily time frame. Sorry, I made mistake here. It should be daily time frame. Daily time frame. Then 1 hour is for confirmation. You use 1 hour for confirmation. This is how the swing trader trade. You use 1 hour for confirmation. Your POI and structure should be on the daily time frame. This is what you should for swing trader. Then for day trader, this is what you should use for day trader. If you use the daily time frame to check the direction of the market, you use 4 hours to mark your POI, 1 hour, mark your POI, then you use 15 minutes for confirmation of this one, for confirmation for this one. This one, they work together. The 4 hours structure works with 15 minutes confirmation. Then this one work with 5 minutes. Understand? So let me just draw this at the front here. I made a mistake. So this I should be. This I should be. Nothing more, nothing less. This I should be. So now, let me share my screen on the tariff pair I analyzed yesterday. Where's tariff pair analyzed yesterday? I can use any other chart for that, but that one I've already analyzed it. So I just want to just go straight to it so we can have something fast. Then it won't waste our time. Let me share the screen of this one. Okay. So this is the tariff chart now. So if you are a day trader, first thing you will do is to check the for deriv. I think their highest time frame for analyzing their chart is the daily time frame, which is 24 hours. This is it. If you want to do top-down analysis now for this pair now, what will you do? What will you look at first? You look for where the market is coming from and where the market is going to. Now, on this chart now, looking at this chart now, with this one with the messaging, is it? Some people they have problem. So looking at this chart now, you already know that market has been going, it has been buying. But market is still bullish anyway. Until market make a significant change before you know where the market is going to, where the market is still heading to. Now market has been buying, and now we have a resistance level here. This place is resistance level, and in this resistance level here, there is another block here. There's another block here, which the price tap into, and price started making reversal. So now, if you take maybe the reshape now, they will not allow us go back to back test. That's one thing. So let's say market start buying from here. Maybe you are using Forex pair where you can back test to see back. I will still use Forex pair. I'm just trying to use this one because it's something that I've checked and it was I analyzed yesterday. So maybe you start buying from around this place, and when market was going up, market got to this place, there was liquidity here, but because of the way market was bullish, it didn't give any change of character. Continue buying. It got to this place again, but around this place, you don't have a good liquidity. You don't have a good liquidity. So market still got to this place. It didn't respect any of this place, didn't give any change of character that you want to sell. But market took out this liquidity here, then went above to tag this other block that is here, and it started giving change of character already. So when you see something like this, you already know that okay, from here, when you are holding your trade, price was not giving you that a change that you want to sell on the lower time frame. You keep holding it till anywhere you see price giving change of character. Now, when you are trying to swing, you are trying to do a swing trade. I told you that this one now, maybe on this chart, the direction was on the weekly time frame because this is a swing type of trade. You understand? This is a swing type of trade. Now, this is where your TP is at. The place you set your TP is where price is trying to reverse from. That you know that price will reverse from. Now, on this daily time frame, there is a structure here, and that's why price has been reversing already. There's a structure here for now. So what did I tell you? I say weekly, daily, and 1 hour for swing trader. Now, if you want to get entry, you cannot start selling immediately price got to this place. You wait, then you go to like 1 hour time frame. When you drop down to the 1 hour time frame, what did you see? You will see structure. You will see a lot of structures. But which one tap into the zone is this one. If you see change of character around this place and you want to sell, let's say you saw buy side liquidity here, then price break structure to the downside and give you liquidity and you want to sell, price will not respect this place. It will take it out until price tap into your POI here. Now that price has tapped into this POI, it gave us buy side liquidity, gave us market structure shift here. Then it gave us pullback as liquidity, gave us a double top liquidity, which is a very good liquidity. Now, what do you need to do? You mark a zone that is closer to your liquidity. The zone that is closer to your liquidity is the one you are interested in. Now, the closest zone to liquidity after price take out this liquidity is this place, is this failed order block here. So you mark it out. When you mark it out now like this, if price gets into this place, what you need to do, you can, if you want to be more careful, you can still drop down to like 5 minute time frame to look for confirmation before you take the trade. But in this scenario like this, you already know that the stop loss is just 55 pips, which is not that much. If price gets into the zone and give you candlestick confirmation, three candlestick confirmation on the 5 minute time frame, you can just take it. You understand? If price give you three candlestick confirmation, you can just take it. Now, looking at this now on the 1 hour time frame, when price tap into this zone, it gave you this second candle, which is the middle one, and the middle one is the highest one, having a long wick. Then the third one closing below it is three candlestick confirmation. You can see that immediately tap into the zone and gave this three candle, 1, 2, 3 confirmation. After that, you start selling from here. Your stop loss will be here. You see that it started selling. So this is where you take your trade from. If you are to just use candlestick, if you are not waiting for market structure shift and any other thing, you want to just take your trade immediately price tap into your zone. You want to use, that's what we call risk entry. But confirmation entry is the one you wait for market structure shift and everything to form and wait for pullback into another zone before you take it. This place, this one is risk entry where you have 1, 2, 3 candle. So after the third candle closes below this middle one, you will start taking your trade from here. Then your stop loss will just be here. Instead of using this whole big stop loss, your stop loss will be here. Now your stop loss will be this 85 pips. Then your TP should be here. Your TP1. The reason why I say your TP1 will be here is because market is still bullish. You understand? Market is still bullish. This one that market is giving us here is just change in character. But you are not very sure yet if market has changed character very well. If market gets into this place and continue and start buying, you can maybe take some profit. Maybe you open some position, a lot of position. You can take few profit, you understand? Taking few profit, maybe you open like 10 position, you can close like 5 and hold 5, maybe setting break even for it. And when price give you confirmation here on the 5 minute time frame, you can take the buy also, following the buy till maybe you see another structure along the line. Maybe you have this, or you are price reverse into this place, gave you a structure on the 1 hour time frame. So you can now say, okay, if you start buying from here again and price get to around this place, maybe it give you another confirmation that it want to sell. You will now open more position for sell, then you close your buy. Understand? That's how you trade for swing trader. So you are still holding the five that are here. You understand? You close five already. You are holding the remaining five because it has hit TP1. You close five here. You are holding the remaining five because you saw change of character that price want to buy. After that, when price gets into the zone you analyze here around this place for sell and price respected it, start selling, you add more position. So you hold it because you are swinging. You add more position, you close your buy, you are swinging. Then your next target should be here again. Understand? If price give you confirmation again that I want to buy, most of the time it may not give you confirmation again. It may just continue crashing and breaking. You understand? It may just come to this place, break it, come to this place, break it. It may not even give you confirmation again. Because if price has changed character truly and it has broken one of the supports, it will just keep testing the support, then continue selling. You understand? That's for the swing trader. So that's for the swing trader. Let's go to the daily. I'll also do another swing trading for currency pair, the um, USD JPY stuff. What's it called? Also, I still have another one here. Was it volatility 10? Something like that. Let me go to the 24 hours time frame. Now, looking at this chart now, it's not this one. It's not this one. The structure I'm waiting for is for here. It's around this place. Or along the line, there's another structure hidden in this place. But this place is liquidity for the 24 hours time frame. But on the 4 hours time frame, this place is not liquidity. This for 4 hours time frame is giving a structure there. But even if price give you structure, if you not see change of character, you will not take it. But on the 24 hour time frame, this structure is liquidity. That's why I say you should know where the direction of the market is going to, so you will not take losses. Now, looking at this chart, you can see that the market has been bullish, it has been buying. So let's say someone was in the market, someone was in the market before, then this class for I forgot to subscribe my Zoom. It seems we'll hold another class. Hold another class. I'll upload this one, but I will send the link a few minutes after this one ends. So we'll continue with currency pair. So as I was saying, this was bullish, you understand? This was bullish. It has been bullish, you understand? So if price is bullish and you're already buying, there's a place that price will get to that it will start selling. That's where you want to know where direction of the market will change. So if you look at this whole place now, you saw buy side liquidity taken out. You have break of structure downside here. This is a break of structure downside. Now, after price break the structure, it pull back to the upside, then giving you liquidity, which is this place. Then price continues selling. Now, you have this already. You are interested in this zone here. There's a zone. And I said the zone you'll be interested in is the one closer to your liquidity. So anything that is happening around this place, they are all liquidity. The price may respect them and maybe pull back for a while to any buy side liquidity, any sell side liquidity here. So you can continue the buy into the main POI. So when price gets into this POI, you just drop down to the 1 hour time frame because this is a swing type of trading. It's a swing structure. If price didn't give you any change of character in this place, then that's why you have another PY up here. That's how I avoid losses. I don't take more losses. If I take loss, it's because I didn't follow my trading rule. But if I follow what I analyze and what I used to teach, I will not take losses. Even though I take loss, maybe it's because of news or anything happened at that moment. Or I didn't close my trade. Maybe I left it. I didn't close it. And something happened. Understand? So it will help you minimize your loss if you know what you are doing. If you know how to enter your trade. When this price get to this place now, if I didn't see a market structure shift in this place, if I didn't see something like this on 1 hour time frame, when price get to if I didn't see something like this creating for me on the 1 hour time frame, I will not sell. I will leave it. Understand? I will not say I will leave it. I will make sure that I will know that this place is not valid. It's not that the zone is not valid. I mark it very well, but it may not valid because price is interested in this place. Maybe a lot of sell limits are here. Maybe a lot of all those big boys, their sell limits are plenty here, so they want to take their trade from this place. Understand? So you said you that you are a retail trader, you calm yourself till you see what you need to see before you take your trade. Understand? So that's how you do it. Let me go to currency pair. I know the class will end, but I'm recording it and also I will um do another one. So these are the rules you follow. These are the rules you follow. For day trader, for day trader, this is GPJPY. Let me say I want to do day trading for GPJPY. I'll go to daily time frame. Now, I taught you something about markets making. Let me delete this. I'm sorry, I'm coming. Now, if you look at this whole chart now, you will know that market has been bullish. I was buying from around this place. I analyzed this chart here. I was buying from around this place because I have this is a daily time frame. I use this place as my these two candle. This one was longer than this. So I use this one as my buy side liquidity. Then it was on 4 hours time frame. Then price came back to it. I was buying from here before I close around this place. Close around this place. But since then it has been buying. So looking at this chart now, you know that okay, this area you have a someone is sending message. We can't see the chart. You can't see the chart. Oh. Sorry, let me share the screen of this chart. This one is a different chart. I was sharing the screen of this class is almost over. I will I will send the recording of this one. Then we will continue. We'll do the second class immediately after this one. I'll send another link. I forgot to subscribe my trading view. So as I was saying, I started buying from this place. Started buying from this place because I have a buy side liquidity here. I use the 4 hours time frame to analyze it. Then I have buy side liquidity here. Then I mark my POI. Price came into it. I started buying from around there. Then I close around here, I think. So then since then it has been buying. Now you come to this chart, you already know that price has been buying, and this is a resistance level. This place was resistance level, but price has taken it out. Now, what do you notice? If price take out buy side liquidity, what do you expect? You expect what? Reversal. So now, for that market to start still try to sell, maybe sell to around this FVG that is there. There's an FVG here. There's a good pullback. There's an FVG here because you have three candle closing below each other. One, two, three. Understand? Closing below each other. So that place is a valid zone. So price will reverse and reverse into this place, then start buying again, maybe for continuation. So now, after price take out the buy side liquidity, what do? You drop down to, you know that, okay, price took out this place yesterday. This was yesterday. Now, this is today. That's why market starts selling because price took out this place. Then you drop down to like 1 hour time frame to check. Now, on this 1 hour time frame now, what will you look out for? You look out for change of character. You understand? This was the resistance level that price broke out of. Now you look for what? Change of character. Now, looking at this, you saw a buy side liquidity. Then you saw what? You saw a break to the downside. Now, after this break, what do you see? You have this place as your liquidity. So what are you anticipating now? You can use your Fibonacci to mark from here to here. What do you see? The zones you mark, the valid one, you have this this place as a value zone. You can mark this one, or you can use your Fibonacci to mark what's it called? Your FVG. Your FVG will start from around this place. Understand? So you can mark this place. So if price reverse back to this place, maybe after price do everything tonight, if it reverse back, taking out this liquidity to tap into this zone, then it will sell till you get to this place, then price continue buying. So this is how day trader look for their own entry. Understand? Day trader, they look for their own entry, smart entry, so they can make profit, so they can be in the market as quick as possible. Understand? So for swing trader, you'll be waiting, but for day trader, you look for smart trade to take. I'll show you what I saw on that PUSD that made me take that sell that I'm selling now. Understand? I'll explain that to you also. Let this class end, so I'll send another link. So we'll continue with that from that, and how I took the trade that I can open many positions. Understand? So I'll tell you everything you need to know this night. Madrid don't they play 1-1? Okay. So I'll stop recording this class, then I will try to convert the video so I can send it to the this thing. My volume is low. I will try to increase my volume.